Good evening, ladies and gentlemen. Thank you for the introduction. Good to see a few shareholders here. This is our statutory disclaimer. There's a copy of this presentation. We've got about 80 of them outside. If anyone wants to grab one then, please do. So to start with, just a quick overview of the company. We're developing La India project in Nicaragua into production. We've got a high-grade gold resource. Within that is a reserve, the current economic portion of it, of 675,000 ounces of gold at 3.1 grams. That's very high grade. And the total resources add up to about 2.33. And you can see half of that is in the higher indicated category and the rest is the inferred category. We have to present it like that because we're dual listed on the Toronto and on the London stock market, so we're not allowed to add it up under Toronto regulations. The good news is about 3 weeks ago we were granted the key environmental permit to construct and operate the mine, and that'll be about 80 to 100,000 ounces of gold per annum. We have a goal of proving a major gold district. Nicaragua is a mining friendly jurisdiction. Gold's the third biggest export. And they've obviously just permitted it, so they want a new mine. We've got a strong board and management team with extensive experience. I've mentioned the listing, so that's a quick introduction. Strategy statement for us, to construct the base case, 2,800 tonnes per day processing plant, that's 1 million tonnes per annum, producing 100,000 ounces of gold at La India, and to materially expand that production scenario. And we'll continue our successful exploration strategy and add another 1 to 2 million ounces and prove a major gold district. So there's two parts to our strategy. The investment case, I thought I'd get onto this as we're all potential investors in the company, and I'm directly a 6.5% shareholder, and indirectly I have 10% of the company. We're very undervalued compared to the TSX peer group. We've about a quarter of that valuation. I have a slide on this later on. We've got some serious backing. We've got the World Bank to invest about $5.5 million. Jim Mellon, who might be known to some of you as an entrepreneur, Ross Beattie is probably one of the biggest mining entrepreneurs in Canada, sent his guys down. So they've all come in after extensive site visits and due diligence. Our price to book ratio is about 0.17 times. Another way of looking at us is what's the cost per ounce in the ground. The gold price today is $1,200 an ounce. You can buy an ounce in the ground here for $14, or just over 1% of the gold price. The all-in sustaining cash costs, $700, that's your break even, including the sustaining capital. The reserve number in a pre-feasibility, the PFS's pre-feasibility, is 80,000 ounces of gold a year for 7 years. Which is pretty attractive. We've got upside by adding in feeder pits and underground, which I'll come on to later. We've got the potential, we think, to double that production number. And this could be quite a big gold mine. And we've got a 5 million ounce potential. So coming on to Nicaragua, this is a couple of countries north of the Panama Canal here, sandwiched between Costa Rica and Honduras, El Salvador. It's the biggest country in South America. We have a Pacific Ocean and Caribbean coast. We're 2.5 hours drive from the capital here up to the mine. This is the Pan American Highway that runs through the country. The biggest, well, a 60,000 ounce producing mine is 30 miles away. It's part of the same gold system, essentially. And that's owned by a Canadian company called B2 Gold. And the other areas in red are our other concession areas. We can drive on tarmac right up to the project. We've got grid power through the project. These are great things in mining. There's not the capex to build new roads in or put power lines from 100 miles away. So that we're lucky with that. The project itself, now I'm zooming in on the sort of high-grade core of the area, which, and you'll see this is 2.3 million ounces if we add it all up. What we're permitting, I'll just come on to this, is La India Vein Set. And within that, you've got 1.3 million ounces of gold, so that's 1.5 billion US dollars. And of that, 900,000 ounces is the pit, which we now have the permits for as of 3 weeks ago. And underneath it, there's 400,000 ounces. Now, the core area runs up here. these three vein sets, which I've called together 2.1 million ounces of gold. This is quite close together. It's 1.5 kilometers between each vein set. For the geologist amongst you, this is called a low sulfidation epithermal vein system. It's formed by faulting and cracks in the Earth's surface, and the gold fluids come through on it. It's very different from most of Africa. There are outlying areas of four of them, about 50,000 ounces each, here, 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 and here. All these 7 areas here can be expanded by drilling along strike and going down the ore chutes. So far, a lot of drilling, 80,000 meters of drilling is on this project. I'll give you an idea, we've raised $45 million US in the last 7 or 8 years. Our market capitalization today is around about $35 million US. Now that's partly gold price off 37% since its high 7 years ago. We're lucky we raised money at much higher levels, but it just gives you an idea how undervalued these things are when you're, the valuation on the stock market is less than the money that's actually gone in to deliver this to date. And I think that represents an excellent opportunity now that we're actually permitted. I put this picture in because that's your India vein. That's your 1.3 million ounces of gold. Here it is. That's the open pit, and that's what we permitted. And underneath it is underground at 400,000 ounces, and we think we can double that underground by drilling down the ore chutes. And there's our reserve numbers up here, which I mentioned. But you'll see there's no village or a settlement. That's a mercury mill from locals. It's completely illegal, but we had to move that. There's some houses over here. We're going to put a barrier in here between a bund, or a Burma, as they call it, between the community and roads and that, this area, which has all been permitted and agreed with the ministries. So the key permit, onto what we've been granted. This is excellent. There are mines around the world delayed, many getting written off because they haven't got permits. Up in the high Andes, there's several in Canada that have taken 5 years to get permits. We finally got permits, and one of the reasons we've got them is that we re-amended our permitting application to have no resettlement. We were resettling about 300 houses. That proved much more of a challenge than we were told by the government. So the ministry said, no problem, you can move the houses. Talk to the community, that became another conversation, which they didn't, a few protested against. So we listened to the community, it's a key thing, and we've got no resettlement whatsoever happening. And we've got a pit that's 20% smaller, but we're going to have about 600,000 ounces of recovered gold over the life of mine. And in my recovered gold, I'm saying into gold bars over that period. In the reserve number, we're about 80,000 ounces of gold a year. We will, over the next 12 months, work out, and we have some internal studies already done, can we mine that a bit quicker? Can we get it out in 6 years? Because that brings forward your cash flow. And of course, we would like to be producing a higher number per annum, and we're permitted for the higher production number here. We've moved the plant away from the village, and this is the mine site areas, and we're going to create about 1,000 jobs. So that's the permit. It's excellent news. The team have done a brilliant job. I changed the team, almost most of it, about a year ago. Got a mine superintendent in from B2 Gold. I hired 10 more people in the social part. And permits very, very much come from the bottom up. It's not just the ministries. You've got to deal with the communities. And we've been putting, I'll come on to a bit of that, but it's a really, really big thing for this. This is an old mining town. It produced gold before. The grandfathers had a rich time in the community, and we're bringing the village and the community back to its glory days of wealth. So before I get on to the social bit, I've digressed. We have, this is our mine site layout. So we have a community here. We have an open pit here, schematic. We're 1.2 kilometers away, we have the plant. You can see that, explosives. Sorry, this is in Spanish for the English amongst us. A tailing storage facility. It's all quite tight and neat. That's what's permitted. This is just to show that we've got a barrier between village and town. Just put this in. Social benefits of the no resettlement. We're saying to the village, we're going to put $1 million into your community. And drinking water here is for 30 minutes and every 48 hours. The one big thing you want on all your surveys we've done, if you haven't got drinking water, is you want drinking water. So today we're distributing 360 of these 5-gallon drinking water things to 360 houses. We're doing that free as our humanitarian contribution, if you like, up there. And we're spending about $20,000 a month with the community right now. But of this, we'll put this in, the main focus will be water. You might say education, but it's water when you don't have it. Because a lot of diseases actually happen if you've got contaminated water, obviously. We're training 300 people. We're going to have about 1,000 jobs. The average salary in 3 commercial mines in Nicaragua is $700 a month. Nationally, it's $200 a month, and actually in this poor part of the world, it's about $100 a month. So the allure of a salary of 7 times what you get paid up here, where there's mainly artisanal mining and subsistence farming, is quite important. We'll take the artisanal miner ore, put it through the main mill. That'll eradicate the use of mercury and the cleaning up of the environment. The locals use mercury without any protection. And we're forming a number of strategic alliances as we go up, and we'll take the poverty level in this part of the world is 42% under the UN Poverty Index, which we've done studies on with the IFC and World Bank on it. So we can take that in half. So we've gained the social license. We have to continue to gain the social license. It doesn't stop here, it kind of starts in a way. And we're spending this sort of money with our team of 15 social people. We've got lots of engagement groups with communities, with the elderly group. We've got 6 people on an elderly committee who are getting $100 a month from us. That's the average wage there. And we're then giving that elderly committee of 6 people a couple of $1,000s and say, what do you want to do with the elderly in the community with it? So we're empowering the local people all the time. And no one else has done this up there. So gaining this license, I could spend a lot of time talking about this, but part of my job has been working out how do we get this social license to operate. It's key, and we've got it. And I've touched on the giving drinking water, but we're helping artisanal miners. So for example, the artisanal miners, we have a mining engineer inspect their shafts and pits and give them rope and safety. We can close down shafts if we think they're unsafe. We bailed out, we had one poor artisanal miner who the thing collapsed on him, broke his spine. We ended up paying for the medical, and all that helps enormously if you're the guy with the ambulances or the Land Rovers and stuff to take them into the hospital. So we do a hell of a lot. We really have pushed this massively. The World Bank, part of this is also linked in with the IFC investment arm of the World Bank. We had totally signed off pre-production to what's called the IFC performance standards. So we do generally we spent hundreds of thousands of dollars on these things. Some people think they're a little tedious, but they're well worth doing. So we have proper stakeholder engagement plans, communication plans, grievance mechanisms, groundwater participatory monitoring programs. All these things are big de-riskers for a project. So the second part, so I just touched on what we're doing there. The other part of what we want to do to add value is to increase those ounces that we've got. So the core area I mentioned to you is 2.1 million ounces of gold. We can take that to 3 million. We can increase it 40%. Within those 3 vein sets, so La India vein set, which I showed you, drill down the ore shoots, we can take it up from 1.3 million to 1.6. These are drill-ready programs. We need cash to do that, but that's low-hanging fruit. It'll cost you $7 to add an ounce of gold. So the cost of adding it's cheap for us. We'd like to do that. And all these, we hope that one of these comes through. Well, we're pretty sure that cacao now, we have a 5,000, we've traced this. It has a strike length of 3 kilometers on cacao. And it's the top of a boiling zone. It's got what the geologists identify as sinter. We're very positive about one of these becoming another 500,000 to 1 million ounces, but we've got to drill it. So there's lots of upside on the actual 7 targets, or 7 resources that we currently have. La India vein set, we drilled last year with 6,000 meters. The Soviets drilled this in 1991. They estimated 680,000 ounces of gold, really high grade, that's 1/3 of an ounce. We currently have 330,000 ounces. We can convert that Soviet resource, this number, over to this. We drilled it and we got the top of it really super high grade. And people in the job, we had 3.3 meters at 28 grams, it's almost an ounce. And then 100 meters beneath it, we got 2.6 meters at 23 grams. So I've given an indication of the resource side, if you can calculate it, just within one zone of, this vein goes for 1.5 kilometers. So in about 4 in a high-grade blowout zone, and it is a high-grade core, you're going to have 150,000 ounces here, we estimate internally. That's just an internal estimate. We think that also it's got strong potential to take the top 50 to 80 metres out in an open pit. We're running some studies on that, which I'll come on to. So strong potential here to add a feeder pit. The district play, I mentioned we've got a big gold district. Well, while we've been waiting for permits for 2 years, we haven't been doing nothing. This is about 30 kilometres by 25 kilometres. In fact, it goes down here. And it's 313 square kilometres, the entire district. So I started 10 years ago here buying 122 square kilometres. I bought 9 other concessions. It goes all the way around here. This is the outline, and then it goes down here a bit. We've applied for 2 more concessions, by the way, to the north, which we put in our interim report, if anyone would like to look at it, and 1 down here, because we think this system, actually, the faulting, where the gold comes through, continues north and south. We have 5 ounces of material up in the north up here. It's never been drilled. We've got a drill permit to do that. This is a mineralised corridor, and here's a mineralised corridor. I'll come on to these. They're here. That one's got 2.1 million ounces on it, and that's got nothing on it, really. We think that's a parallel structure. There's also a linking structure here. This is 20 kilometres long. There's going to be more gold here. And this whole area faults down. There's a highway fault, we've called it here. There's a detailed presentation on our website on the structural geology and the geotechs here. So to show a major district, you've got to do soil geochemistry, helicopter-borne geophysics, structural geological model, detailed geological mapping, trenching, drilling. We have 110 kilometres of veins. The resource is on about less than 20% of that. So somewhere, the rest of that some of that's going to be converted into a mine, or will be economic, or resources and then economic. And cacao, we're particularly excited about. All the geologists are here. This is the one I mentioned. We might have another 500,000 ounces. So the share capital structure, if I just go on to that, this is not really updated. Well, it's about 40p. We're somewhere here. We have Ross Beatty with roughly 8%. This is Hargreave Hale in London, Canaccord bought them with 6%. The IFC World Bank was 6.7%. Oracle's a Swedish fund. Myself, Jim Mellon, another director. So 2 directors with 12% directly. City Financial's a London fund, as some of you will be familiar with. So that accounts for about 40%. We've got 67 million shares outstanding. We've got a couple of million quid in cash. The warrants are way out the money at the moment, so not expecting this to come through. So what next for the project is kind of what we want to know. I'll just wrap up with, I've got 2 more slides if you'll bear with me. This one, so what's next? So we just got permits. We need 12 to 18 months to move the pre-feasibility study to a bankable feasibility study. The production will range between 80 to 100,000 ounces of gold a year. We'll push for the 100, obviously, followed by an 18 to 24-month construction period. Lycopodium, a company in Australia, build mines, do nothing but build gold mines. They've given us the quotes to build all this on a contract basis. That's essential work. The government wants to see us breaking ground, for example, in 18 months' time. That's in the permit, so that's what we need to do. But during that time, in parallel, we want to prove we've got about 160,000 ounces, or 160 today, in feeder pits. I've indicated that on Mestiza we think we've got another one, so we want to. This is a bit more. That could potentially add another 20 to 40,000 ounces per annum. Now, we've got the resource, we've run internal studies on this, but we've got to bring them into a proper mine plan, i.e. bring them into reserve up to a PFS level. We'd like to do that in the next 12 months. We want to add our 1 million ounces with this 20,000 metres of drilling, and we want to continue to demonstrate we've got a gold district with a bit of scout drilling and some trenching, maybe a bit of drilling on cacao. So that's my subject to funding. Those 4 parts, I think each of those will be catalysts as you continue to de-risk the project and show this is a major gold district, bring more production ounces into the mine plan. So I'm going to leave you with this thought. Some of you are analysts here who know Daliradian Resources. I'm not looking at anyone in particular, which has just been taken over by Orion Mine Finance. So without a permit, I hasten to add, in Northern Ireland, much safer jurisdiction clearly than Nicaragua, which is why they're valued a bit more. But I thought I'd do a comparison between the valuation that this company has just been acquired for 308 million US. We've got a valuation of 33V, an EV, so that's net of the cash. The reserve number, they have almost double the reserve that we have. We've got 675,000 ounces, they've got 1.4. Production ounces, I like to look at that because if you're going to buy something, what is actually in a mine plan that can come out? You really want to pay for that. That, again, is basically just over double what we've got. Measured and indicated ounces, that's the higher confidence. They've got 3 million, and if you add their inferred in, so that's 3 times us, and then you've got their overall just over 2.5 times bigger, and their NPVs about 50–60% more. How does that work on a valuation comparison between, this line is Daliradian resources. They're all about, that's a reserve ounce of gold for us, for them. That's a production ounce, that's a measured indicated, that's a total ounce. In each case, that's been valued on that acquisition price at 4 times our share price. I'll leave that. You can cross-check those numbers yourself. They're my numbers, I'll put my hand up for it. And on that note, I'm happy to take any questions.
Questions, anybody? Gentleman towards the back.
What is the estimated cost of building the mine and how will it be financed?
The cost of the upfront capital cost of the mine is about 120 million US dollars. We won't be needing that money for at least 12 months because we want to run those 4 parallel strategies. The financing for that will run models over the next 12 months now we've got the permits. It's typically going to be financed 60-40 of debt to equity on a project. The banks generally, I had 2 calls today with the banks from the United States. Seems everyone's got back from holiday and realised we got permits and can we lend you some money? So I'm having to say to them, well, let's meet. We'll, of course, if a bank lends against a gold project, they have an offtake agreement collateralised against the plant. They'll have an offtake from the gold. So by and large, they're happy to lend against gold projects because of gold as a currency. Get paid back. So that's the cost.
One more question. Will you be paying your employees in local currency?
We do pay them in local currency at the moment.
How is the local currency faring against the US dollar recently?
It's pegged to the US dollar. So it is a US dollar with a managed depreciation of 5% per annum by the central bank. But there's like a Hong Kong peg, if you remember that currency. It's a peg currency, the US dollar, with a 5% managed depreciation. So actually it gets better for us.
Thank you very much.
Hello.
You're there. Okay,
For your
sorry.
very concise presentation. You've mentioned you've made 2 further applications for concessions in the north within the Golden area.
Yeah.
How does this relate to your competitors, the Canadians, in the similar area that you've said aren't too far away?
Well, as the crow flies, they're about 30 miles away. They're about an hour by road and track. What we've applied for quite a lot of land. We've applied for over 100 square kilometres. And it's actually because the faults run north, northwest, south, southeast through that whole district. We've actually sent our geologists out to map other people's land, if you like, and they were free from the ministries. So we've applied for the ministry. So it doesn't border on anybody else's. So they're free. They're available for you to apply for if you want, but we're in there first.
Gentleman just down there.
Thank you. It's a question regarding long-term production.
Yeah.
You mentioned at the moment you're at pre-feasibility and you want to get into the business of production and stuff.
That's right.
First question was, you said that you had 7 resources.
Yeah.
Have you got permits for all 7 at all depths, or was it for the main area?
No, we've just got permits for the big open pit there, which has a reserve of 675,000 ounces, but it has a contained gold of there's some inferred material in there. So the resource about 900,000, after the slightly smaller pits, so about 800,000 ounces of gold that we've got the permit for. So we're only permitted for that. Now in Nicaragua, these vein systems, you get this outcrop material happening, and you quite often If you look at what B2 Gold have been doing, and the chap who's running it for me is ex-B2 Gold at these 2 mines for 6 years, they quite often say, oh, right, we've finished that small pit, we've got another outcrop of gold, we'll take 50,000 ounces for that. So once you've got the master permit and built your plant, it's, they want to continue that. You know, once you're overall approved, you've got a workforce, and I don't envisage any challenges. And importantly, there's no houses around the feeder pits. There's not. They're further to the north on that map.
And the second question was, you were mentioning about expanding it to the north and south because of the vein. What's the policy? Wouldn't it be sensible to actually start producing and then think about the extension later and have more money in the bank rather than going after prospective prospects? Thank you.
It's a very good point. I think if we expand the overall resource by 1 million ounces, and we get to 3.5 million ounces of gold, you can, by and large, normally get about 2/3 of that out. So what we're trying to show, although the strategy is to construct and operate the mine, the company's been run on that basis. This is very much, as I see it, a base case. So I think this is phase 1. Phase 2 is to double production. Now, that we want to show. One way to create value for the shareholders is for us to do what we think we can do within our limited resources, which is to do a medium-sized mine of a single pit. We also are very conscious that the gold industry out there hasn't been on the frontiers drilling for gold. They haven't the last several years. There's a lot of the trade and big producers out there going, where's my next mine coming from? Because gold's a depleting asset, and they're looking at where's it going to come from? So the big boys would like, if they took a look at us, which is possible, generally want to see something a bit bigger. And so part of that strategy is to sort of wave the beautiful Condor out there a little bit, and you might find that we get taken over rather like Daliradian. We're not in talks, we're not looking to do that, but this does create value. And I'm saying to you, I think we can create an additional ounce for, say, $7, which should be valued nearer $50 in the stock market. So, yes, if we add another 1 million ounces, and that costs me $200 an ounce per resource ounce to drill, that drill program at 20,000 meters cost me $4 million, plus another $1 million of studies and costs. It cost me $5 million. I would hope on my market capitalization to see a multiple of 5 times on that. So that's a value creation. And the pyramid of gold companies, as you get bigger and bigger resources and show a 5 million district in our business, they become rarer and rarer and rarer. There's a very much a pyramid triangle effect within the industry. I hope that answers the question. So it's all about getting a share price up and valuation.
A quick question here. Bill's announced a dividend, possible dividend from gold mining. You know, what do you see in a time scale? Where do you see? Now you talked about you might like to sell the company. You talked about that, or the asset. If you're going to produce it, when do you actually see production ramping up? You know, cash flow, possible dividends. Are we talking 2 years, 3 years, 1 year?
No, we're under the permit. We have to start construction within 18 months. So we have to break ground, start construction. So the base case, simple pit, if you like, we've got to start within that, and we'll need to do that for permitting reasons. The construction period is another 18 months, so we might go early. We'll do what we can. So you're 36 months before the first gold pour, realistically, from today. Dividends, a little premature to be talking about dividends. We haven't been in production for 8 years. We have to pay back the debt, I would think, is the first thing we need to do. Certainly the banks won't let us pay a dividend until we pay that back, or we have surplus. Of course, that all depends on the gold price. If it's at $2,000 an ounce, we'll be very happy. But I wouldn't invest in this on the basis that it's going to be paying dividends anytime soon.
But probably a 3-year time scale before.
Well, 3 years before we pour gold.
Yeah.
So, but the vision is to make this is that 4-point strategy. We're producing 80 to 100,000. We want to size it day one to be at another 20, 40,000 ounces in with those feeder pits. We're only permitting 40%. As that 800,000 ounces I was asked about out of 2.4, we can grow that again by 1 million ounces. So this is a big system. We generally think that. But adding the rest will probably be underground ounces. Underground mining is a lot more expensive and capital intensive. You've got to sink shafts or drives and other elements. That's too much for us to do as a company at this stage. The quick cash flow is open pit material. So I think that we will run the company as though we're going to do that out of cash flow later. So partly answers a dividend question. We'd probably like to increase production 50% by bringing the underground, because we've got, hopefully then we'll have 3.5 million ounces. Yeah.
Great. And time for one final question. Oh, two final questions. Sorry.
I would like to ask you the government involvement in business. Is there any proportion, percentage-wise, if any profit or?
It's a good question.
Similar like the previous one, like 51% or something. Yeah. Thank you.
Thank you for the question. Now, I'm pleased to say we own 100% of all the concession areas in Nicaragua. There is no free carried interest whatsoever to any government entity or official. So the economic attributable is purely to our shareholders. And we own those through our wholly owned subsidiary companies in Nicaragua. We own all those 10 concessions that make up that 313 square kilometres. As I'm on, partly to answer your question, so we own 100%. The mining law is that there's a 3% royalty off the top of, i.e. of sales, gold sales goes to the government, and there's a 30% corporation tax on us as a company. I assume we make a profit. Obviously it's got to be profitable. The upfront capex question I had of $120 million is fully tax deductible over the first 4 years or so. Or first few is on an amortization basis, but so we won't be paying a lot of tax for the first 3 to 4 years, I imagine. So it's quite mining friendly. Even now, if we import Land Rovers from the UK, they're taxed. We don't pay any tax. So it's cheaper for me to buy them and to import them to buy them locally. We don't have to, because we have a mining concession. So the government gives tax breaks and advantages on both of that. So we own 100%. That's how that works.
How secure is that? Say, for example, the government trying to nationalize your company?
Well, how secure is it? Well, we're in a frontier market. There's always a risk, and shareholders should be aware whenever they're investing overseas that that's a possibility. Mind you, we managed to nationalise a number of things here not so long ago. So there's a risk. I think if they were going to do it, they would have done it before they gave me permits. If they were going to ask for 10% free carried interest, they had me by the on video here, aren't I? They had us in a sort of difficult space, waiting for permits. That was the time to knock on the door and say, right, we want 10% free carry or 20%, which happens in most of Africa. There's a percentage of free carried interest to the government or someone, and they didn't do that to their credit. There's one more question.
Just one here.
Is Nicaragua a politically stable country? And wasn't there a funny guy who was their president and he was coming and going?
Thank you for the question. Nicaragua had a revolution in 1979, led by the time Daniel Ortega. They overthrew a right-wing military junta that was keeping control with death squads. That was a proxy war between the US-backed Contras, you might be referring to. And that recent film, Made in America, has done us no favours because that's all about Nicaragua. And Colonel Oliver North, for those of us of a certain age, might remember that Arms for Iran scandal that came through. They then had the Soviet Union had a big stake in there. That went bankrupt, as we all know, 30 years ago now, and it actually pulled back from all the stans, which they got their independence, and it came out of Nicaragua. And just giving the potted reply to that. So it had free and fair elections about 2000. Daniel Ortega was out of power for 17 years. He came back in about 12 years ago as a born-again capitalist. So they've done a cosy deal with, they've done a deal with business, they've had free trade zones. In the last 5 years, the economy's been growing at 5% per annum. It's fair to say that in the last 4 months, the country's been in some turmoil politically, which I'm sure some of you have read about. There's been a number of deaths and shootings. Our message to the government has been peaceful dialogue, please. They have dialogue tables at the moment. They have a number of people trying to sort out that situation. But it has been through a difficult phase in the last 4 months. Having said that, President Ortega and the Sandinista Party have reasserted themselves and have control. They are elected for another just over 3 years. The next presidential election is in November 2021. That presidency and government has granted us permits 3 weeks ago. So I'm not expecting him to go early. I think why would he? He's been elected. So yes, there is some political risk with the jurisdiction. I'm happy to talk to you further separately about that. It's quite a big subject.
Mark, thank you very much indeed. Thank you. Thank you.